FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome, and you are listening to the Financial Survival Network. I'm Kerry Lutz. Today is July 30th, 2018. So, as always, be part of the show. Send us your comments, your emails, your complaints, your praises, whatever you're in the mood to send. The email address is kl@kerrylutz.com. So, mining, resource stocks. How do you make money in these things? Doesn't it often seem that the whole thing is just tilted against you, that basically all the insiders, they have the advantage and you'll never be able to compete with them on a level playing field? Well, person you're about to hear from, Jamie Keech. Jamie graduated from University of Toronto in mineral engineering. You actually spent the early part of your career working in exploration in Mexico, Nevada, the Yukon, and Albania, of all places. And then you went back, got your master's. You know the way the Vancouver game is played. You know the players there, and we welcome you to the show. Thrilled to have you.
Hey, Gary. Thanks for having me today.
So when you're looking at all these companies, you go through PDAC or you go to resource conferences, and you see a lot of companies there that claim to be in the mining business, and some of them actually are, but many seem to be in the stock promotion business. Well, first of all, you can still make money that way, but how do you tell the difference, and how do you compete on an even playing field with the insiders of Vancouver?
Yeah, I mean, you raise a very good point that there are many more companies that claim to be in the mining business than are actually, trying to discover a mine or actually trying to mine one. And I think probably your listeners out there who've had any experience investing in this space or following this space will have at one time or another been burned when they have invested or partaken in a company that claims to do one thing and has done something entirely different. And, mining, and particularly exploration, where a lot of these Toronto Stock Exchange and Toronto Venture Exchange companies are listed, is a very risky space. But, it's a lot riskier when the money that you're investing in this company is going just to pay some fat salary for an executive based here in Vancouver doing nothing than it is for actually looking for a deposit. How do investors tell the difference? I mean, the easiest answer to that is track record. You're going to see that a vast majority of the discoveries that have been made, of the mines that have been built, of the successful operations are run by an incredibly few number of people. In the space, there's several household names. There's the Robert Friedlands, there's the Lucas Lundins or the Ross Beatties, and it's these small groups that make the big discoveries or built the successful mines. And the number one way I would say to at least get your toes wet in the space is to back a group that has a track record.
So track record is key, because that's the probably best indicator of credibility you have that somebody is actually in the mining business.
Well, that's right. I mean, what a lot of people don't realize is that, the barrier to entry to working in this business is extremely low. All these companies will have a great website and they'll have some property, either it's a local safe sounding property, a gold project in Nevada, or it's, a foreign exotic sounding property with a project in Brazil or the Congo. But, that's very easy to put together. And a lot of the people who are, running these companies don't actually have any, technical or financial knowledge of how these projects work. They've just managed to get their hands on something that they're marketing as a mining project. And then they're able to convince a few people to fund them. And they do the very, very basic minimum to keep the company alive and pay themselves a salary.
It's a fascinating dynamic because, look, we see this all over. Wherever public securities, wherever there's a market in securities, we see these opportunists come in, and their primary goal is to get the stock price as high as possible, cash in, pay off high salaries, etc. And it happens at Silicon Valley. It happens in the oil patch. It happens any place where there's an investment theme, if you will. So I guess,
right. And any place where there's speculative venture capital in particular.
Yeah. So you have to deconstruct the story that the promoters are pitching you, right? But you need some specialized knowledge to do that. Yeah, track record, very important. But track record alone isn't enough, is it?
No, beyond track record, there's two primary things you want to be looking at. You want to be looking at the financial structure of the company, and you want to be looking at the technical merits of the project or the property. And few people are capable of doing both of this. Successful or experienced investors will probably have an idea of how to break down the structure of a company. They're going to be able to look at, they're going to be able to read a balance sheet. They're going to be able to see what price management or big shareholders bought their stock at. They're going to be able to develop an idea if management's incentives are aligned with shareholders. But actually understanding the technical aspects of these projects is a lot of work. And a lot of people get stuck in the trap of thinking that, they can read a press release or they can read a technical document and it all sounds good. And they've convinced themselves because it sounds good, it is good. And unfortunately, the majority of these things take the most wildly optimistic view that is humanly and legally possible on these projects. And if you're not able to really dig into the data and have an understanding of these sort of assets and these sort of projects, it's really hard to tell the difference between fact and fiction.
Yeah, for sure. So when you're dealing with a gold mine, silver mine, it could take 10 years to get that project through. When you're dealing with...
it could take 10 years to get that project permitted.
Yeah, exactly. So, but when you're dealing with other resources like oil in the States and other such resources, the time is a lot less. So these people get proven out a lot quicker. But in the gold mining and, precious metals area, the timing is definitely against the investor. And yet, even a stock that's in a permitting process will periodically go up, even though it's probably never going to see that mine go to fruition.
Well, that's right, Kerry. These long timelines really they're both complementary and detrimental to the cyclical nature of the mining industry in general. So what can happen is a project or a company that is worth absolutely nothing at $1,000 gold price can be, $1 billion company when gold goes to $1,700 an ounce, as we saw happen, 10 years ago. So it's not only, this project may or may not have any better chance of ever getting brought to fruition, brought into production, but just the perception that the value is constantly increasing and increasing for factors entirely outside of the scope of what the company is actually doing can cause wild swings. And the inexperienced investor can often not understand why this is happening, or they can attribute this to the actions of the company as opposed to the actions of the market.
Yeah. So right now where we're at, gold and silver taking a hit and the stocks taking a hit as well. Are we in a short-term kind of correction phase here? Or could this be something longer term than anybody is really anticipating?
Well, I don't like to speculate on any individual metal price. And, I observing the market for my career the last 15 years, most of the time when people say, gold is going to $2,000 or gold is going to drop, they're wrong. And if they are right, it's just because they've been consistent long enough. Gold and silver basically traded sideways. They've been relatively stagnant the last 2 years. I am bullish on gold and silver in the medium to longer term. What I don't think we're going to happen is an immediate gold run in the next 2 to 6 months. I could be wrong on that. I hope I'm wrong on that, but that's where I see. In the fullness of time, precious metals tend to increase in value. That's my general thesis on it. And if you look at historical charts, even ones adjusted for inflation, that's what you see. I think gold is cheap right now. I think there are a lot of operations that are not making money. There's a lot of projects that have not been put into production because of low prices. And exploration, not only in precious metals, but across the mining sector, has more or less stagnated for the last the better part of 10 years. So we're seeing really, really deflated commodity prices right now. And in my opinion, in my experience, this is the time you want to be looking at and investing in commodities. It is not when, everything is increased by 3,000% and everyone's buying. Because at that point, the money's really been made. And a lot of people, everyone loves to say they are an anti-cyclical investor or they take a contrarian mindset, but it's really hard to do because when you're looking at the things that are contrarian, they look bad and everyone tells you they're bad. And, you really have to have the conviction of your beliefs and really look at the underlying data, which is not an easy thing to do.
Yeah, for sure. So what we do know, as the late, great William Rukeyser used to say, the market will tend to fluctuate, and others have said it besides him. So kind of we're in this point, though, where production is declining in both metals and potentially substantial declines ahead. So is that going to be enough to affect the price and make it start going up?
Well, we're really seeing this in particular in the base metals, like copper, for example, is a great example of this, where, the biggest mines in the world over the last several years, we've seen, obviously the size of the asset is decreasing each year as it gets mined out. The grade is decreasing. So the highest grade, the most valuable material gets mined first. So it just leaves the lower grade material left at the end. And we're also seeing production rates decrease. So that means the rate at which they're able to pull that metal out of the ground, it's slowing down because it's getting deeper and deeper. It's getting harder to access. So, this is really particularly observable in base metal commodities, in, the coppers or the zincs or the nickels, where the demand for these things is really based on real supply and demand of construction and development and what's going on in the world. And, we've seen this very consistently over the last 5 years of a decrease of grade, production rate, and size of assets. And these assets are not being replaced by exploration at the rate at which they're being depleted. So yes, I do think this is going to be something where our society is going to need to fulfill. And we're probably coming into a proper exploration market for the first time in 10 years. And then that means that people actually have to go out and they need to find new mines. And that isn't expensive. It is a time consuming and it is a very speculative process.
Yeah. And you see them going back to old mines because best place to find more gold, more silver, or a new deposit is where old ones were found. And I see this recurring theme at every conference I go to where technology, whether it's tailings piles, whether it's parts of a deposit they knew were there but weren't economic at that price, then it's kind of back to the future, right?
Yes, that's right. Traditionally, the low hanging fruit gets mined first, right? Mm-hmm. Anything that's easy to get to, we go to first. But as supplies decrease, as value increases, these things that were at one point not economic, all of a sudden it starts to make a lot more sense to go back and look at them. And this is particularly true given, the scale on which we can mine today, from a physical extraction standpoint, as you were saying, and also the ability to process, to refine, and extract the minerals from the rock. We're getting better and better at that. We're getting better recovery rates. Our ability to basically squeeze every last dime out of a piece of rock is increasing every year. So these old deposits do start to get a lot more attractive as time goes on.
Yeah, and a lot of them have the main deposit been exploited, but there wasn't much exploration done around them. There wasn't any drilling to speak of, but yet they look very promising. And yeah, that theme is recurrent. So
now I would also caution people, though, that just because there was a mine there at one point, one, doesn't mean it's still valuable. And two, doesn't mean that you're going to find another mine beside it. And this is prime hunting ground for the bullshit artists in Vancouver. They go and they stake some old mined out piece of garbage and, they raise $500,000 amongst their friends at, 1 cent. And they go out to the market at 25 cents and say, look, we're going to bring this mine back into production. It's going to be great. It's going to be spitting out $100 million a year, et cetera, et cetera. And these are the kind of traps that people easily get get stuck in.
Yeah, that's such a great point. Just because gold was found there before, or silver, and a lot of it, doesn't mean there's anything meaningful there now.
That's right.
What are you basing that hypothesis on? Where did you come up with this idea? Because look, the history of mining is replete with examples of people digging right next to where the greatest strike ever was found and coming up with nothing. So you can't be taken in, and that's a common appeal of the promoters to get their stocks out there. So,
well, what is the Mark Twain quote about a mining promoter?
Yeah.
A promoter is just a liar standing next to a hole in the ground, or something like that.
Yeah, gold mine, definition of gold mine. Yeah, so and those old truisms are truer now than ever before, and yet we're talking about this industry, and there are real opportunities available if you know where to look. And your book, which I found extremely helpful, quick read, but it's kind of like, to me, it's really a primer on what you need to know about mining. The Resource Insider that you wrote, extremely helpful in at least getting the basic knowledge, so you're not like the total sitting duck.
Yes. Yeah. Well, I mean, we wrote the Resource Insider. I wrote the Resource Insider as a way just to provide, the average retail investor an understanding of how this market works. What are the common traps that people fall into? What do you actually want to look for? I mean, we run, a mining research service. We have, tens of thousands of subscribers, and I get questions every day about people playing in this market. And they say, Jamie, what's the difference between an exploration project and a production project? And I mean, if you don't know the difference between those two things, then you got to read this book, and you shouldn't be buying mining stocks until you do. And it's just these basics that will be able to give investors, such a head start on the average person, and not be caught in these common traps. Yeah,
which is, so many of you out there have been caught in them. I've been caught in them myself. I don't think I'm any different. Don't get me wrong.
And I should say that I've been caught in them too. I mean, and this is a common misconception. That people think that because you're in the industry, because I'm a mining engineer, but you're a geologist or an accountant or a banker, that you know exactly what's happening. And each of these projects, each of these deposits is so different. Like a geologist that is a expert on epithermal gold projects in Mexico is not going to understand to the same degree as a geologist that is an expert on porphyry copper deposits in Chile. Mm-hmm. These are a different mindset. I mean, if you think about it from the tech perspective, it's almost like a different programming language. They're both programmers, but they're speaking a different language. And the idea that any one person really knows everything and can evaluate any sort of project and make good decisions for any opportunity is a widely popularized falsehood within the industry. And I mean, I tell our subscribers, every time that when I look at a project, when I bring an opportunity to them, I talk to people who are experts in that space. I tap my network of geologists, of engineers, of financiers who've worked specifically in that region of the world, and they understand how those jurisdictions work and the government and how it operates and the social problems and what you can anticipate. I talk to geologists that have worked specifically on that type of asset exactly. And, they look at the data with me and explain to me step by step, what are we looking for this to be a success? What are the red flags you see in these sort of projects? And, I've spent 15 years learning and working in mining projects all over the world, and I still need to commonly rely on that help and on those expertise. Yeah. And I would really caution people out there to be cognizant of that. And as soon as you start to think you know everything, it's probably when you're going to lose a lot of money.
So you've been at it for 15 years, so you're pretty much a newcomer.
I guess. Well, I started. Yeah, that's right. Yeah.
So, but it's obviously in your blood. And how'd you get into this mining thing? I mean, I know being in Canada, it runs in the national DNA. But something drove you to it.
It does to a degree, but I didn't actually grow up in that at all. I come from a little city in Ontario called Kingston. It's about 100,000 people. Mm-hmm. And I was avid into the outdoors, rock climbing and canoeing and hiking and all that. And when I was in high school, I asked my guidance counselor, I said, is there a job where I can work outside and, not make $20,000 a year. And he told me he had a friend that was a geologist, and I started researching that. And it was the first time in my life I'd ever heard of mining or geology or thought about it as a profession. And I kind of fell down the rabbit hole, and then I decided on engineering because I was better at math. And then I went to the University of Toronto when I was 17 years old, and I really stayed in it from then on. I loved what I was doing. I mean, I spent the summers working out in the bush in, Nevada, Mexico. I went to Albania when I graduated. After that, after I did a master's, I headed to Mongolia, and I worked in Mongolia for some time. And then after the Canadian Arctic. So I have had the opportunity to be involved in a lot of stages in the mining process, from exploration to development of building mines, the actual production of mines. And also I spent a year doing just environmental permitting, which I will say is not a process I enjoyed because it was a bureaucratic nightmare and basically just managing red tape. But it was one of the most valuable things I did in my career, because you really get to see firsthand, like, where these delays happen, where everything goes wrong, why timelines basically never stick.
Yeah, that's such a great point. I'm really glad you raised that. The fact that you spent the early part of your career doing something you really hated. I mean, we all do that. I mean, that's called paying your dues. But the value of understanding a permitting process, and obviously in every jurisdiction, it's going to be different. There's going to be different requirements. It's different here in the States than it is up north in Canada. And in Mongolia, forget it. I can't even imagine. But once you know it, I mean, that gives you probably one of the biggest insights into whether this project is for real or not, right?
Well, yeah. And I mean, I think the important thing that I took away from permitting is that whenever a company gives you a permitting timeline, they're lying. But they're not just lying to you, they're lying to themselves as well. They've convinced themselves that, the government says, it can take 6 to 12 months. Well, that's the most optimistic scenario. So they say, you know what, we're going to do it in 6 months. And that's what they tell everyone. Yeah, and they believe it because they want to believe it because, they're going to get their bonuses and things are going to go better and shareholders will be happy if they pull it off. But the reality of that happening is next to nothing.
Yeah, it's not going to happen. Everything takes longer than you think, right? Isn't it the truth?
And it costs more money.
Yeah, and it's more expensive. And if something can go wrong, it will. And, that's Murphy's Law. And O'Brien's corollary, which said Murphy was an optimist. And certainly that applies in mining more than any place. Jamie, so the best place to find your work and your group's work is capitalistexploits.at. Do I have that right?
That's right.
Okay.
That's right.
So go over to capitalistexploits.at. Best place to find you. And can we get the book there as well?
That's right. So if anyone goes to that website, there's going to be a big link on the front called, Resource Insider. Just click on there. You're going to be able to download the ebook. You can also email me directly. If you have any questions about mining, if you want to learn more about what we're doing at Capitalist Exploits, it's just jamie@capitalistexploits.at. And our primary service is we offer subscribers a mining research service that provides access to private placement opportunities. So the ability to get in very early with mining companies that are either just starting up or they're launching new projects, and they're looking for accredited investors to invest. And we invest alongside all of the things that we cover at the same rates as our subscribers. So my goal is just to go out there, find the best places to allocate my money in the industry and tell people what I'm doing and give them the chance to invest alongside of us.
Hey, which is a very noble undertaking. As always, join the show, be part of it. Email us, kl@kerrylutz.com if you got any questions or comments on anything you hear here. The Twitter feed is @KerryLutz. The Facebook page is Financial Survival Network. Jamie, pleasure having you on. We'll definitely talk to you again soon. Thanks so much.
Thanks for having me, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.